Hello traders, in this session we'll be discussing about intraday risk calculation concept. I believe that this is the most important topic every trader has to know. This concept is my golden ticket. Following this has helped me be more disciplined while trading. At the same time, it has made me profitable. If someone had taught me this concept during my early days of trading, I would have achieved my goals more quicker. Traders, trust me, this is going to be very useful for you. Before we discuss about intraday risk calculation concept, I want to speak about the concept of stop loss, as it's very important topic all traders has to know. I will try to explain this topic as simple as possible with an example. Okay? Basically, what stop loss is? Stop loss is nothing but setting up your risk bearing capacity in a trade. Correct? Let us say I have 3 lakh rupees in my trading account and I invested this entire money in a trade. Before entering the trade, I calculated my stop loss and the stop loss for the trade was around 10,000 rupees. After entering the trade, let's say the market went against me and I lost the trade. Now tell me, will I lose the entire 3 lakh rupees which I have in my trading account, or will I lose 10,000 rupees? Of course, if I keep stop loss as rupees 10,000, the maximum I will lose is 10,000 rupees. The remaining 2,90,000 will be there in my trading account. Alright? Likewise, if I lose one more trade with a capital of 2,90,000, keeping 8,000 as my stop loss, the balance capital will be 2,82,000. Right? This capital is still intact in my trading account. Correct? So it is very important to determine your stop loss before you enter a trade as per your risk appetite. At the same time, we need to understand that if you want to make profit in thousands, then your stop losses will also be in thousands. Have you seen anyone investing 1,000 rupees and making 1 lakh rupees in a single trade? And especially in intraday, it's not possible, right? So there is always risk involved in trading. You might have seen a lot of traders posting video on public domain stating that they have made a profit of 5 lakh or 10 lakh rupees in a single trade. When we see those videos, we only see the profit that they have made. But have we ever wondered what is their risk appetite? To make 5 lakh rupee profit, they would have risked at least 2 lakh to 3 lakh rupees. No trader has ever been 100% accurate. In the stock market, there will always be those trades in which the market will go against you and hit your stop loss. So it's very important for us to understand the risk that is involved in every single trade we take. I completely agree. Losing money is a disaster. The day I started planning my disaster first and then trade, I was able to trade with peace of mind. So every time I trade, the first thing I decide is my stop loss. I have made it an habit to tell myself that today the maximum loss I can bear is only this much amount. No matter how tempting the market is, I will never lose money more than my pocket size. For example, if my risk bearing capacity per trade is maximum 5,000 rupees at any cost, I will not lose more than 5,000 rupees on a trade. Making profit is very important, but defining our stop loss is 100 times more important. If you make profit in the stock market, obviously that money will fall into your bank account. And of course it will make us happy. At the same time, losing money above my risk appetite will for sure make me miserable and emotionally stressed. There are always winning trades, and at the same time there are going to be losing trades. We need to accept that, learn from our mistake, and keep on improving ourselves so that we get better every day in trading. That is the same thing in all the field, right? We need to learn from our mistake and then we need to improve ourselves. Traders, I hope you're getting my point here. Now let me tell you my story. In the year 2013, someone very close to me told me to invest in the stock market, saying that I can double my money very quickly. So I got excited and started investing in some of the popular company stocks. At that time, I didn't even have idea about fundamental analysis, technical analysis, or did I even know that there were charts. Days passed. One day I get a call from my stockbroker and he told me the stock in which I invested is going down and I have lost 12,000 rupees. I was working in a company at that time. and my salary at that time was 20,000 per month. How much? 20,000. Now imagine a person whose salary is 20,000 per month has lost 12,000 rupees in just one day. Traders, trust me, that was the worst month of my life. It might look like a small amount now, but at that time it was terrible. It was a big loss for me. Only after that event, I decided that I will learn trading the right way, and never ever in my life I will trade beyond my pocket size. Traders, I want you to understand this. The market will always try to attract us. It will show us a lot of positive things. Like if you compare the price of the stock during the opening market and the closing market, the stock price would have been increased to 3 to 5%. Even I have fallen for this trap. Even I was thinking, oh, these options are so cheap, just 3-4 rupees. I should have entered this trade. I would have made 25 to 30% profit. Or I used to think, oh, I saw this breakout, but still I did not take this trade. I should have bought one lot of futures of the stock. We think like that, right? But the reality is, after market hours, anybody can say anything. But in the live market, it's completely a different situation. Our emotion will come into play because we have risked more amount than our pocket size, isn't it? I suggest you not to fall for these traps. The concept which I'll be teaching you today, I personally follow this no matter what happens. When I'm in profit or loss, I follow this rule. Even after so many years in the stock market, I am still able to trade just because I follow this concept. Now, without further delay, let us get started with the concept. Intraday risk calculator concept. I will explain this calculation with an example. You can make changes to the calculation according to your financial situation. Okay? So let us start. Let us say Mr. X salary per month is 50,000 rupees and his monthly expense including his rent and food expenses is equal to 30,000 rupees. This is for his present security. So month on month he needs 30,000 rupees to manage his expenses of the month. Okay? Now traders, tell me, don't you think Mr. X has to secure his future as well? Apart from securing his present, like investing in a long-term mutual fund or SIP or saving fund for his retirement, and especially during this COVID pandemic, don't you think he needs health insurance? So a person has to invest at least 20% towards his future, or else it's going to be very difficult, right? So 20% of Mr. X salary is 10,000 rupees. So we will say this 10,000 rupees is for his future security. Okay? So from 50,000 monthly salary, 30,000 rupees is going for Mr. X's present security and 10,000 rupees for his future security. And the balance that he will have after all these expenses is 10,000 rupees. This 10,000 rupees will be Mr. X's monthly risk capital. Remember, this 10,000 rupees is not his capital. This 10,000 rupees is his maximum amount of money he can lose in a month while trading. For example, in the month of September, there are 30 days, right? Out of this 30 days, let's say there are only 20 trading days. The remaining 10 days, let's say it was weekend or public holiday, anything as such. So we have only 20 trading days for the month of September. And if Mr. X decide to take only one trade per day, that means he will have 20 trading sessions, right? So now, what is Mr. X's risk appetite? His risk appetite per month is 10,000 rupees. So he has to divide this 10,000 rupees by 20 because he's taking only 20 trades, right? And the risk appetite per month is 10,000 rupees. So when you divide this, the answer is 500 rupees. This 500 rupees is the maximum amount of risk he can take per trade. Okay? If Mr. X decides that he will take only 10 trades that month, that means 10,000 divided by 10 trades per month, that is 1000 rupees. So the maximum amount of risk he can take per trade is 1000 rupees. Okay? Traders, I hope you're getting my point here. If Mr. X is taking 20 trades per month, then his risk appetite is 500 rupees. Now for him to decide how much quantity he needs to trade, he needs to follow this method. 500 rupees, that is his risk appetite per day, we need to divide it by the stop loss amount. So let us say his stop loss per stock is 5 rupees. So 500 rupees divided by 5 is 100. So the maximum quantity he can buy is 100 quantity. Okay? Even if he loses that trade, he will lose only 500 rupees. Whatever is his capital, it will still be there. Correct? Or if we say the stop loss is 10 rupees. So 500 rupees divided by 10 points. The answer is 50. So the maximum quantity he can take is 50 quantity. He can also consider 450 rupees instead of 500 rupees if he feels worried about the broker charges or the other tax charges which he might incur after the trade, so that even that is covered. Now let's say Mr. X do not want to trade with stocks. He wants to trade with future and options. For example, bank future. Okay. In this current market situation, one lot of Nifty bank future is 25 quantity. When we're trading with Nifty bank, we need to give at least 80 to 100 points of buffer. Correct? Because the volatility is high when you're trading in bank Nifty, right? Minimum 80 to 100 points of stop loss he needs to keep. So if we consider 80 points, that is the stop loss, into 25, that is the minimum lot size, it will come up to 2000 rupees per trade. There are 20 trading days in the month. So 20 days into 2000 rupees is 40,000 rupees. Traders now tell me, a person whose salary is 50,000 rupees per month, will he have the capacity to risk 40,000 rupees in a month? For sure he cannot, right? We cannot compromise on a present security of 30,000 because what will he do for his rent and food? He cannot compromise on his future security of 10,000 rupees also because his future has to be secure. Now the only way he can increase his risk appetite is by increasing his salary. So if Mr. X salary per month is 80,000 instead of 50,000, in which 30,000 goes towards his present security and 10,000 rupees goes to his future security, he will have 40,000 rupees still with him, which he can use to increase his risk appetite. Correct? Traders, I believe even you will agree with me on this. So first, Mr. X has to focus on increasing his present salary so that he can increase his risk capacity without affecting his present and future security. Traders, I'm able to focus on my trade without getting emotional only because I know my loss will never be more than my pocket size. After following this, I have never felt emotionally tensed or weak because I know the worst outcome if the market goes against me, right? I can confidently tell you 50% of the battle is already won by controlling our emotion. Rest 50% is our strategy and our experience. In the stock market, can a person take a risk of 1000 rupees and make a profit of 15-20,000 rupees? Is it possible for him to do all the time? Absolutely they cannot. The risk has to be at least 7,000 to 8,000 rupees so that they can earn 15,000. I'm speaking about intraday. In intraday, you can expect 1:1 or 1:1.5, and most of the time you can expect at maximum 1:2 risk to reward. But if we be more greedy, for sure the market will hit a stop loss and we will lose the trade. Okay? Traders, it's very important that everybody takes care of their present security and the future security before they start investing in trading. Once you take care of these two things, only then we need to invest in the stock market. Okay, this is a very important concept. I suggest you to watch this video more than 3-4 times because you need to get more clarity about this before you start investing in the stock market. Traders, that's all for this lecture. I hope you enjoyed this video. I'll see you in the next one.